Let's take a look at some charts on Decred from this week's article on Brave New Coin. So Decred is a proof of work, proof of stake hybrid, which also incorporates governance. And you can see the incentives here for the block reward or how the block reward is split. 10% goes to development, and the rest is mainly proof of work with some proof of stake. You can see this is only 10% dev subsidy compared to 20% for Zcash, for example. There was a pre-mine for Decred as well as an airdrop. So nobody's perfect here, okay? Decred did have a pre-mine. Decred is a Bitcoin code base fork, which isn't a bad thing. All it says is they used some of the Bitcoin code to then make new code and then make new code again, is how we got to Decred. If we're looking at the phylogenetic tree of Decred. Block time's about 5 minutes. Hash rate and difficulty have basically plateaued over the past year. 56% mined. In general, in my opinion, it's probably one of the most honest proof of work, proof of stake hybrids. If we look at just comparing Dash to Decred, very similar in that they are both proof of work, proof of stake. They have a dev subsidy. They have governance baked into the protocol. Dash is larger in market cap by several magnitudes and leads DCR in pretty much every on-chain metric pretty handedly. DCR does have more GitHub commits over the past year than Dash. If we look at the governance mechanism, Polyatia seems pretty simple and straightforward and is working and has worked since, I think, October 2018 now. So when they enabled the new transparent site for Polyatia. Most of this stuff is marketing related and not necessarily, coding related. This bug bounty coding related. Everything else is usually marketing related. It's kind of just how it is usually, especially if there's already a dev subsidy. The dev work for the coin is paid for, so any ancillary governance stuff is typically marketing related, unless there's some massive vote that needs to happen to determine future protocol changes. If you look at the proof of stake, they use the ticket system. So you buy tickets and then you're basically chosen at random to get the block reward from the proof of stake pool. And the price of the tickets is based on supply and demand. So to see prices of tickets increasing since July 17 says that more people have bought tickets over time. But it's nothing, parabolic. It's nothing crazy. Look at hash rate, like I said, it's kind of plateaued, slightly down over the past year, but pretty much flat. Hash rate, importantly, 30% are solo miners, which is great. It'd be good to see less people in these pools and more people as a solo miner, because the network is basically two pools and solo miners. So if these two pools wanted to collaborate and destroy the network, they could. It's never going to be an easy process, but they do have 51%. They have 60%, 61% of the network hash rate. But because this is a proof of work, proof of stake hybrid, that adds a layer of complexity and difficulty as far as the ability to hijack the network. So this is definitely a reason to support proof of stake, proof of work hybrids for this very reason. When these altcoins have very condensed mining pools, they're usually higher targets for attack, whereas proof of stake makes it more difficult to attack than just looking at proof of work hash rate distribution. If we look at the miners, the ASICs that have come out since the past couple of years, you can see there's been nothing since July 2019. Most of the ASICs are not in profit. So this is probably one of the reasons why hash rate is flat or declining over the past year. Everything's all goes kind of hand in hand. If price is flat or declining, hash rate's going to be flat or declining. No miners are going to come out. There's no buzz around the coin. It's all kind of this sick flywheel system where it's all about price all the time. Everything that ever matters is always about price. The higher the price, the higher the on-chain metrics, that sort of thing. So when we're looking at transactions per day in the line here and average transaction values in the fill, it's all just down, down, down since all-time highs in 2017, 2018. And it's kind of flat, kind of recovering. It's always good to see this consolidation in any chart. It says that the bearish exhaustion is occurring or trying to occur. So this isn't bullish in a vacuum by far, but to see it stop declining is helpful, certainly. You don't want to see something go to zero. If we look at daily active addresses in the fill and NVT, an inverse metric of economic utility in the line, NVT is at an all-time low. Daily active addresses at an all-time high. By itself looks amazing. Then you realize, oh, they enabled coin mixing and DEX stuff, and they have other stuff that they added post mid 2019, which makes these numbers look a lot better. And it's hard to compare the two periods in time because it's just the protocol does different things. So yes, this is bullish, more bullish than it was before, but we're going to need like 2 years more of data to really see, is this relevant, right? Because of course it looks better than before. They're doing more stuff. And NVT is really only good to compare to itself over time in a static, non-changing environment. So because this, again, is a changing environment, it's like, okay, yes, the NVT is at an all-time low, but it's way lower than it ever was. And that should be super bullish, but it's just it's apples and paper clips. It's completely different. Google Trends just flat over the past 2 years, ever since, the all-time high. I haven't seen much Decred anything in press other than Bitcoin people who are like hedging Decred if Bitcoin fails, something like that. It's no link in the press, we'll say it like that. If we look at technicals, 50, 200, yearly pivots, VPVR, RSI. So this 5200 cross has been bearish since mid last year. It had this muted bullish momentum post cross, which is why it's important to pay attention to stuff like an Adam and Eve bottom as it's forming. Again, this is consolidation, bearish, exhaustion. So yes, the 5200 cross here, the trade was terrible, obviously, but ideally you're in back here. I'm not seeing anything similar to that currently. This is more of a just bearish down, retesting the 200 over and over and over. It's at a key level in that volume at the $16 mark. Just this horizontal has been the highest at any price point between 6 and 140. So a lot of volume at 16, a lot of volume at 29.30, yearly pivot there. So those are the levels I'd watch. This looks like it wants to try to reverse to the upside. It's getting there. So I'd watch 16, I'd watch the yearly pivot at 23, I'd watch 29, and I'd watch 34. Those would be the levels that I'd be watching. It could be setting up for this macro inverted head and shoulders. Shoulder, head, return to the neckline, break down again to around 15, something like that, and then make a run towards 29.30. That could be 6 months to a year away, so it's not like the opportunity cost isn't massive if you're just sitting in this, because it is. I don't think this is going to be a big mover in the near term, but it does look like it wants to attempt a move to the upside. If we look at the cloud, it kind of says the same thing because we're inside the cloud. Metrics aren't super cleanly bearish. You want price above cloud. We did get this Kumo breakout that went nowhere earlier this year, similar to the previous one. This Kumo breakout was arguably better than the 5200 cross on the daily, that trade. So anything above the cloud here is another go time situation for the long side, because that says we're above trend metrics we need to be above to be bullish. We're above previous resistance. And at that point, price will be above the 200 as well.